assuming or penciling in a 25 basis point rate cut? Is that a no-brainer at this point?
Well, we are penciling in a 25 basis point cut. Is it a no-brainer? I don't think so. I think this is going to be a remarkably close policy meeting. The question is sort of, what do you look at, right? On one side, you have very high 8%, over 8% real growth. Now, one way to think about it is that, okay, growth is strong. Even if there is policy space to cut, what is the policy need to cut? And this is sort of the logic of the October meeting when RBI said that there is policy space, but, we'll wait and watch. Growth is fine, so there's no need. The other way to look at it is that, RBI is an inflation targeting central bank, and inflation is way, way, way below the target. I mean, it's currently tracking around 0.3% as of last month. RBI's target is 4%, the lower band is 2%, and now you're below 1%. So in this situation, the current real rates then are extremely elevated. And if you're inflation targeting, it's on both sides, right? If inflation is high, yes, you would hike. Similarly, when inflation is too low, you need to target that. And if that's the situation, you would say that there would be a cut. I think another point which would be interesting to see is what is RBI's assessment of growth, because is RBI going to take the 8% plus growth on its face value, or is it going to say that actually no, the output gap isn't bridged or isn't positive, but there's actually some inherent weakness still in the economy?
Dr. Nandi, like you said, what do you focus on? And so I'm just wondering, you spoke about a real GDP overshooting perhaps and inflation undershooting. The RBI did not change its projections for the full year for GDP at least. Do you think it's going to be forced to do that this time around? And what about inflation? Do you think that they're going to have to adjust that as well?
Absolutely. I mean, RBI's FY26 inflation growth, if I'm not mistaken, is around 6.8%. The first half of the year growth has averaged 8%. So even if you assume a slowdown for the next 2 quarters, you're essentially looking at around 7.4% or so. Similarly, on the inflation side of things, we see the inflation for this year to be around 2.2%. It's currently the RBI has it at 2.6%, which is way, way up. Our own forecast is 1.9%. So yeah, I mean, there's going to be a readjustment of growth, readjustment of inflation. And then the question is, well, now that you've adjusted these forecasts, how does your new policy framework then fit into these forecasts?
I do have a question, and this is not normally something we take up, Dr. Nandi, but we have to talk about the rupee, and I'm guessing that the RBI governor will have to do so as well. What would you anticipate in terms of commentary? Because they've been pretty clear in the past, at least when they speak at press conferences. But do you think they're going to say anything different this time?
I mean, look, I think they're going to maintain the stock lines that, we always intervene on when it comes to capping volatility. I know there is a section in the market who believe that, okay, RBI's interest rates, why should they cut? Because rupee is weak. But here's the problem with that logic. RBI is and should be an inflation targeting central bank. It can't go and start targeting exchange rate one day or deposit rates the other day on lending rates. So it's focused on inflation. So I'm sure and I think the market would be interested in anything that the governor has to say around exchange rates and its sort of tolerance. But I don't see much of the interest rate policy sort of being linked specifically to what's happening in the exchange rate. If it happens, I'd be quite surprised.
And thank you for putting that out as well, because it is important to get that dissection too. I believe Madhvi Arora, lead economist, MK Global Financial Services, with us as well. Madhvi, thanks for joining in. And 2 points that Auradeep made, which I would want to get your view on. One, that it may not be a complete given that there is rate action. I differ, but Aurobdeep is the more informed one and the more intelligent one. So I would love to get your opinion on this. And two, is the policy commentary going to be a lot more about what the RBI does with regards to the rupee as well, or not quite?
Hi, thank you. So I don't think, I'll start from the last bit. I do not think that rupee would be a great consideration for the Reserve Bank. I understand that, the currency has been quite a discussion point. It's down almost 5% plus since beginning of the fiscal year. And we obviously underperformed against other emerging market peers, especially in Asia. But to a large extent, this is something which is warranted. This is something which ought to happen given the fact that we have been penalized much more than our peers as far as US penalties concerned. And the byproduct of that has to be a weaker current account and a weaker capital account flows. So and rupee tends to become the adjusting factor in that. So I think to that extent, rupee is basically an automatic stabilizer. I think the policymakers, both on the fiscal and monetary side, probably seem to be okay with the depreciation of rupee in a more stable form. Of course, nobody likes volatility around, but I don't think this would be one variable which should deter the Reserve Bank. And very honestly, in India, that whole argument of interest differential leading to a stronger rupee doesn't really work, at least in the near term. Now, coming to other points, we are looking at 25 bips rate cut. We have been arguing for one even after the June policy gave a 50 bips cut. We've been arguing that there was more space for the Reserve Bank to cut. To be very fair, in the second half of this financial year, RBI's last forecast of inflation would be probably undershooting our numbers by as high as overshooting our number by as high as 130 bips. So I think it will be very difficult for them to actually ignore the kind of inflation undershoots versus the Reserve Bank's own forecast have been. In fact, for the last 4 consecutive policies, they've been only revising it down, and this policy would not be any different. To be fair, both markets and Reserve Bank have sort of misread this macro cycle as far as inflation growth forecasts are concerned, which also underscored how unreliable these forecasts have become in this cycle. So I'm not sure whether it makes sense for the policymakers to actually lay too much emphasis on 1 year ahead inflation or 1 year ahead growth forecast per se, because we as Street, we as Reserve Bank have absolutely gone wrong in terms of the current macro landscape. So I think they've already communicated a relatively dovish stance in the recent discussion with the media. I understand that it still is a very close call, and there could be a split in MPC on the timing of the rate cut, but not necessarily on the on the need for the cut. For me, the bigger variable would be how they communicate, whether they cut or not, and of course how they are going to manage the liquidity infusion going ahead, because I think liquidity would be a bigger variable to watch out for as far as market transmission is concerned, and we are hoping that they would address that and probably come out with some measures in the next 1 month or so. We are expecting the Reserve Bank to infuse roughly 2 lakh crore worth of liquidity by end March to be able for them to reach a 1% of NDTL liquidity. That is what they had sort of softly pegged beginning of the year.
Okay. We are just about a minute or so away from the policy statement, and we'll cut to that as soon as that comes in. But Madhvi, just a quick word on... Okay.
And namaskar to all of you. We are in the last month of an eventful and a challenging 2025. We look back at the year so far with satisfaction. The economy witnessed robust growth and benign inflation. The banking system further consolidated, and the regulatory framework was refined to strengthen the financial system, enhance ease of doing business, and improve consumer protection. At the same time, we approached the new year with hope, vigor, and determination to further support the economy and accelerate progress. Since the October policy, the Indian economy has witnessed rapid disinflation, with inflation coming down to an unprecedentedly low level. For the first time since the adoption of flexible inflation targeting, average headline inflation for a quarter at 1.7% in Q2 this year breached the lower tolerance threshold of 2% of our inflation target. It dipped further to a mere 0.3% in October 2025. On the other hand, real GDP growth accelerated to 8.2% in Q2, buoyed by strong spending during the festive season, which was further facilitated by the rationalization of the GST rates. Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period. Globally, contrary to earlier expectations, growth has been relatively strong. Evolving geopolitical and trade environments, however, continue to weigh on the outlook. Inflation paths remain divergent, with headline inflation remaining above target in most advanced economies. Pressures in most emerging markets, however, are contained, providing them the room for accommodative monetary policy. Conflicting pulls and pressures from AI-fueled optimism and concerns over high valuations are playing out in global equity markets. Divergence in monetary policy trajectory of central banks is adding to the uncertainty on the capital flows and yield spreads. I will now come to the major decisions of the MPC and the RBI. The MPC met on the 3rd, 4th and 5th of December to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 5.25% with immediate effect. I repeat, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 5.25% with immediate effect. Consequently, the STF rate under the LAF shall stand adjusted to 5% and the MSF and bank rate to 5.5%. The MPC also decided to continue with the neutral stance. Moreover, in view of the evolving liquidity conditions and the outlook, the Reserve Bank has decided to conduct OMO purchases of government securities of 1 lakh crore rupees and a 3-year dollar rupee buy-sell swap of $5 billion this month in December to inject further durable liquidity into the system. I shall now briefly set out the rationale for the decisions of the MPC. The MPC noted that the headline inflation has eased significantly and is likely to be softer than the earlier projections. This is primarily on account of the exceptionally benign food prices. Reflecting these favorable conditions, the projections for average headline inflation this year and Q1 next year have been further revised downwards. Core inflation, which had been rising steadily since Q1 last year, eased at the margin in Q2 this year and is expected to remain anchored in the period ahead. So both headline and core inflation are expected to be at or below the 4% mark during the first half of next year. In fact, the underlying inflation pressures are even lower, as the impact of increased prices of precious metals in this inflation number is about 50 basis points. Growth, while remaining resilient, is expected to soften somewhat. Thus, the growth-inflation balance, especially the benign inflation outlook on both headline and core, continues to provide the policy space to support the growth momentum. Accordingly, the MPC unanimously voted to reduce the policy repo rate by 25 basis points to 5.25%, and the MPC also decided to continue with the neutral stance. I will now spell out in some detail our assessment of growth and inflation. First of all, growth. Real GDP registered a 6-quarter high growth of 8.2%, as you are all aware, in Q2. This is underpinned by resilient domestic demand amidst global trade and policy uncertainties. On the supply side, real GVA expanded by 8.1%, aided by buoyant industrial and services sectors. Economic activity during the first half of the financial year benefited from income tax and GST rationalization, softer crude oil prices, front-loading of government capital expenditure, and facilitative monetary and financial conditions supported by benign inflation. High-frequency indicators suggest that domestic economic activity is holding up in Q3. There are some signs of weakness in few leading indicators. GST rationalization and festival-related spending supported domestic demand during October-November this year. Rural demand continues to be robust. Urban demand is recovering steadily. Investment activity remains healthy, with private investment gaining steam on the back of expansion in non-food bank credit and high capacity utilization, which is of the order of about 75%. Merchandise exports declined in October amid subdued external demand, accompanied by softer services exports. On the supply side, agricultural growth is supported by healthy kharif crop production, higher reservoir levels, and better rabi crop sowing. Manufacturing activity continues to improve, while the services sector is maintaining a steady pace. Looking ahead, domestic factors such as healthy agricultural prospects, continued impact of GST rationalization, benign inflation, healthy balance sheets of corporates and financial institutions, congenial monetary and financial conditions should continue to support economic activity. Continuing reform initiatives, moreover, would further facilitate growth. On the external front, services exports are likely to remain strong, while merchandise exports face some headwinds. External uncertainties continue to pose downside risks to the outlook, while speedy conclusion of various ongoing trade and investment negotiations which the government is undertaking with various countries and jurisdictions present upside potential. Taking all these factors into consideration, real GDP growth for this year is now projected at 7.3%. This is up by about 0.5% from our earlier projections. Q3 is projected at 7% and Q4 at 6.5%. Real GDP growth for Q1 next year is projected at 6.7% and Q2 next year at 6.8%. The risks are evenly balanced. I will now move to inflation. Headline CPI inflation declined to an all-time low in October 2025. The faster than anticipated decline in inflation was led by correction in food prices, contrary to the usual trend witnessed during the months of September and October. Core inflation CPI remained largely contained in September-October, despite continued price pressures exerted by precious metals. Excluding gold, core inflation moderated to 2.6% in October. Overall, the decline in inflation has become more generalized. Turning to the inflation outlook, food supply prospects have improved on the back of higher kharif production, healthy rabi sowing, adequate reservoir levels, and conducive soil moisture. Barring some metals, international commodity prices are likely to moderate going forward. Overall, inflation is likely to be softer than what was projected in October, mainly on account of the fall in food prices. Considering all these factors, CPI inflation for this year is now projected at 2%, again about 0.6% downwards from our earlier outlook. Q3 is at 0.6%, and Q4 moves up to 2.9%. CPI inflation for Q1 and Q2 next year are projected at 3.9% and 4% respectively. I may, however, add that the underlying inflation pressures are even lower, as the impact of increase in price of precious metals is about 50 basis points. The risks are evenly balanced. I will now draw your attention to the external sector. India's current account deficit moderated from 2.2% of GDP in Q2 last year to 1.3%. This is a decrease of about 0.9% in Q2 this year, on account of robust services exports, which continue to do well, and strong remittances. In October 2025, merchandise exports contracted YOY, whereas merchandise imports continued to increase for the second consecutive month. This resulted in widening of the trade deficit. Healthy services exports coupled with strong remittance receipts are, however, expected to keep our current account deficit for this year modest. On the external financing side, gross FDI to India increased at a robust pace during the first half of the year. Net FDI too increased significantly due to a decline in repatriation despite a rise in outward FDI. FPI to India recorded net outflows of $0.7 billion this year so far, basis figures till December 3, primarily due to outflows in the equity segment. Flows under ECB and non-resident deposit accounts moderated as compared to last year. As on November 28, 2025, India's forex reserves stood at a healthy $686 billion. This provides robust import cover of more than 11 months. Overall, India's external sector remains resilient. We are confident of meeting our external financing requirements comfortably. I will now talk about the liquidity and financial market conditions. System liquidity, as measured by the net position under the LAF, stood at an average surplus of 1.5 lakh crore rupees for the period since the MPC last met in October. Money market rates have remained largely aligned to the policy repo rate, which was 5.5%, amidst comfortable liquidity conditions. GSEC yields have remained range-bound since the last policy. In response to the cumulative 100 basis points cut in the policy repo rate, the weighted average lending rate of scheduled commercial banks declined by 69 basis points for fresh rupee loans during this period. In fact, the interest rate effect is even more, at 78 basis points. The moderation in the weighted average lending rate of outstanding rupee loans has been to the extent of 63 basis points, which again is very satisfactory. The transmission has been very broad-based across sectors. On the deposit side, the weighted average domestic term deposit rate on fresh deposits has declined by 105 basis points, while that on outstanding deposits has softened by 32 basis points over the same period. I would like to take this opportunity to reiterate that we are committed to provide sufficient durable liquidity to the banking system. We continuously assess the durable liquidity requirements of the banking system, which happens due to changes in currency in circulation, forex operations, and reserves maintenance. Going forward too, we shall continue to do so. And after reviewing the liquidity situation and the outlook, as mentioned earlier, we have decided to conduct OMO purchases of government securities amounting to 1 lakh crore rupees in this month. Moreover, we will also be conducting a 3-year dollar-rupee buy-sell swaps this month. The details will be notified separately later today. We are hopeful that these measures will ensure adequate durable liquidity in the system and further facilitate monetary transmission. I would also like to clarify that injection or absorption of liquidity through purchase or sale of government securities under OMOs and that through operations under the LAF, which is VRR or VRRR, which are of short-term duration, serve very different purposes. While the objective of purchase and sale under OMO is to provide or absorb durable liquidity, the purpose, which is long-term, and the purpose of repo operations is to manage transient liquidity, which is of very short nature, so as to align the operating target, which for us is the weighted average call rate or the Walker, to the policy repo rate, which now stands reduced to 5.25%. So it is quite possible that on the one hand, we inject durable liquidity through purchase of government securities under OMO, while simultaneously withdrawing transient liquidity through a VRRR operation on the other hand. I would further like to reiterate that the primary instrument of monetary policy is the policy repo rate. It is expected that changes in the short-term interest rates will transmit to various long-term rates. At the same time, the primary purpose of OMOs is to provide sufficient liquidity and not to directly influence GSEC yields. I will now talk about financial stability. The system-level financial parameters related to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain robust. Similarly, the system-level parameters of NBFCs too are sound. They have adequate capital position, and they have improved gross NPAs. The total flow of resources to the commercial sector has been strengthened. This is bolstered by greater non-bank intermediation. In the current financial year so far, the total flow of resources was more than 20 lakh crore rupees, precisely 20.1 lakh crore rupees. This is against 16.5 lakh crore rupees in the corresponding period of the previous year. Outstanding credit from bank and non-bank sources put together increased by 13% year-on-year. Bank credit too has seen an uptick. The latest number that we have is 11.4%. Sector-wise data reveals that growth was supported by sustained lending in retail and service sector segments. Industrial credit growth also firmed up, aided by buoyant credit flow to the MSMEs. Large industries too recorded an improvement in credit growth. Now, before I conclude, I have one additional measure to announce. You are all aware we have been focusing on improving customer services. We have taken a large number of measures in this regard. Re-KYC, financial inclusion, Aapki Punji, Aapka Adhikar campaigns are some of the initiatives taken in association with other stakeholders, including Government of India, Ministry of Finance. Earlier in the year, we reviewed our Citizens Charter too. We made applications for all our services online. We have the Prabha portal. Some 204 services are online over there. We are publishing the summary of our monthly disposal and pendency of various applications on the first of every month for the last 3-4 months now. And I'm happy to note that more than 99.8% of the applications are disposed of within the stipulated timelines given in the Citizens Charter. However, in the recent past, as a result of inter alia receipt of a large number of grievances, pendency with the RBI Ombudsman has increased. I therefore exhort all regulated entities to kindly keep customers central in their policies and operations, improve customer service, and reduce grievances. Further, in this regard, we propose to hold a 2-month campaign from 1st January next year with an aim to resolve all grievances pending with the Ombudsman, with the RBI Ombudsman, for more than a month. I elicit the support of all regulated entities in this endeavor. Let me now conclude. Despite an unfavorable and challenging external environment, the Indian economy has shown remarkable resilience. It is poised to register high growth. The headroom provided by the inflation outlook has allowed us to remain growth supportive. We will continue to meet the productive requirements of the economy in a proactive manner while ensuring macroeconomic stability. Thank you, Namaskar, and Jai Hind.
Well, Governor Malhotra delivering exactly what the street expected, which is why you've seen that beautiful spike in the bank nifty, the nifty reality up and about, the rupee showing some resilience. So that's actually what the key word of this policy would be, resilience. So the 25 basis point rate cut delivered as expected, 5.25% now is the rate. A big takeaway is the sharp increase in the GDP number that the governor is penciling in and the central bank is penciling in for this financial year. That's 7.3%, up by about 0.5%. Meanwhile, inflation outlook is dropping. The inflation number for this year has dropped by 6%. I mean, if you think about it, this is the dream combination, right? You have high growth, low inflation coming in. And I would say, Alex, some moves, maybe not overtly, but covertly, to support the rupee as well, which is why you've seen that rupee improvement.
Yeah, for me, you've already highlighted a couple of the takeaways that I've written down as you were speaking, as Governor Malhotra was speaking. Of course, that rate cut. What stood out also is the fact that it's unanimous, and particularly from the perspective of what Dr. Nandi was telling us earlier today, is that it was not a foregone conclusion. It would have been a little close, but the room that they have on inflation has provided them with the ability to cut 25. But more importantly, what they've not said on the rupee, but what was implicit in what is being done, beyond the 1 lakh crore that is being put through OMOs, there is also going to be a 3-year dollar-rupee swap. And what this essentially means is that the RBI will step in and buy dollar and provide rupee, ostensibly to provide liquidity to the system in the way that the RBI expects that the system will need that liquidity heading into the last quarter of the year. But more importantly, you've seen a sharp move. Actually, there's a lot of fluctuation because you moved about 14 paise on the upside, appreciation, and then it's cooled off just a tad bit from that point. But importantly, a little bit of that speculation that you might see or might have seen in the rupee might go away. I wonder what Vishwanath Nair has to say about this, because that dollar-rupee swap stands out to me maybe in a way adding a little bit of stability to the currency. But beyond that as well, Vishy, we were talking about the fact that will they, won't they? They ended up doing exactly that, cutting rates, and it was unanimous.
Yeah, so, Alex, to be fair, the swaps is something that the RBI has implemented before as well whenever there was rupee weakness or undue rupee weakness. The OMO part, now that's the one that to me makes a bit of surprising sense, because 1 lakh crore that is coming in through that route, and that is an important liquidity provider for the economy, and it's going to happen in this month. 5 lakh crore from the dollar rupee buy sell swap is a 3-year liquidity that is available. OMOs are more permanent, so that's a sense of money that is available to people, for banks specifically, to go out and lend and ensure that this rate cut that they've announced, this 25 basis point rate cut, cumulatively now 125 basis point cut just in 2025 by the MPC, that gets passed on to the consumers. Now, you heard the RBI governor point out that 69 basis point reduction in the weighted average lending rate has already happened, and that is an important reduction, because now you have more rate cuts to be passed on. You will have to ensure that adequate liquidity is available to the system to do that, and that's why these measures are important. What also struck me a little bit is the calculation on the GDP and the inflation front, specifically on inflation. The RBI is now coming out and saying 0.6% for Q3. That's a steep number. That means for now 2 consecutive quarters, you will see inflation undershooting that 2% bottom mark from the target. They have the tolerance band that lasts up to 2%. So for 2 consecutive quarters, you are going to see inflation coming in lower than that. We don't know what Q4 is going to look like, because this was something that was clarified during the October policy and the policy before that in August as well. But inflation has consistently undershot the RBI's estimate. So if Q4 also starts undershooting, you're going to have a peculiar situation. 3 consecutive quarters of inflation coming in below the RBI's target or the tolerance band, and that would mean that the MPC will have to write a note to the government explaining why their rate action has led to this. That will be something that they did when the inflation was breaching the 4% and 6% mark later, and now on the reverse side as well, they'll have to go out to the government and explain themselves.
Okay. I just want to quickly take you through what the markets are doing in the interim. Vishwanath, stay on with us. The Nifty reality is startling in the way it's been responding. Pull up the Bank Nifty also intraday, the PSU Bank indices, all of them up. Nifty reality actually cooling off a bit over there, but the key indices, the Nifty itself also zooming on the those rate cuts announcements, and then maybe cooling off a bit. Sriram Ramanathan, CIO of Fixed Income HSBC Mutual Fund, joining us this morning. Sriram, great to have you on. Your first takeaway in everything that has been responded, including the subtle defense of the rupee, I would say.
Sure. Hi. No, I think heading into this policy, this probably was one of the trickiest ones without a doubt. I think a lot of confusion, because on all 3 parameters you had, for example, growth, you had very good growth numbers backward looking, but FY27 still was in that sub 7% zone. Same thing with CPI, and of course on the rupee side. So it was a tough one for the markets to get their head around. And in fact, I think for most market participants, the left side of the brain did not agree with the right side. So it was that split. I think the governor has provided a lot of clarity in terms of the announcements, very clearly talking about the rate cut given the space provided by the very low inflation. The way the growth and inflation forecasts have been tweaked also gives a lot of comfort. I think it is very important to note that Q2 of next year now, CPI forecast is at 4%. So we are no longer in that. We started off at 4.9 earlier, 2 policies back, then it came down to 4.5 for Q1 of next year. Now Q2 of next year is at 4%. So I think that gives a lot of comfort to the market. Rates, of course, have been reduced by 25 basis points to 5.25. But importantly, also, I think the stress on providing durable liquidity to the markets as required, and which was really underscored by the 1 lakh crore OMO. He didn't announce a time period earlier, but later on he clarified that was in just the month of December. So that gets all of us to work. We are all going to pen down numbers for what we expect for Q4, which is the Jan to March quarter, how much more OMO. Our sense is another 1.5 to 2 lakh crores is likely, which means your total OMO number for this year becomes extremely significant. And I think we are hoping that this gives enough impetus to the bond markets to have a meaningful reversal for yields to head lower, at least given the up move that we have seen recently. So overall, I would say a good policy. A lot of us in the bond markets can now have a little bit more of clarity on RBI's framework and way of thinking. And I think this gives us a bit of way to position ourselves going forward as well.
Okay. Important takeaways from that, Rajneesh. And rather Sriram. And we're joined this morning, of course, by Rajneesh Kumar. That was the name that was on my mind. Thank you, sir, for taking the time. Give us the banking perspective, because ultimately you're talking about credit growth that has just inched up into the double-digit territory, but a portion of that is being driven by gold loans. Would you say that with this 25 basis point cut, there is the anticipation that some more credit growth will take place?
Yeah, so it's a demand supply function, and I think these signs are good because it's not only gold loan. If you look at it, there is a decent growth in SME credit, and as well as there are early signs of demand coming from the corporates. So I think from credit side, after a long time, I'm seeing the growth which is across the sectors, retail, SME, and as well as corporate houses. But as always happens, now the deposit mobilization would be an issue for the banks, how to fund the growth. Already the CD ratio, it is reaching the level which are currently not a matter of concern, but the scope for further deterioration in CD ratio, if it goes above 80%, it will become a little bit of a challenge for the banking system. The rate cut, I think real interest rates were high because inflation expectation is now anchored around 2%, and there was no reason probably for RBI to keep the real interest rates high, despite the decent growth which we have seen. So I always say that the management, always they are challenged. Sometimes it is deposits which are flowing and no demand for credit. Now the situation is reversed. Now the challenge is that the credit demand for credit is there, but the challenge will be how do you fund it?
Okay, I'm welcoming Ashima Goyal, former MPC member of the RBI, into the conversation. Ma'am, thank you so much for speaking with us. I see you at an airport. Hopefully your flight is not delayed, but we'd love to have that conversation. Of course, we also have Sriram Ramanathan with us, as we have Rajneesh Kumar, former chairman of SBI. Ma'am, I want to ask you about we've gone into this policy coverage talking about how tricky it was, and that has been the overarching theme. When you see what has been announced by the governor, do you think that that tight balance has been maintained?
Yes, I think they've done exactly the right things, which is cut the repo, since there were signs of growth slowing forward-looking manner, although past growth has come in really high. And since core inflation is trending low, and that is the trend inflation, there was room to cut, and because interest rates going up resets, and if the government is borrowing more or cutting taxes, the RBI is restrictive. That is the worst combination, because that tends to the pass through of interest rates had slowed. The other really good thing in this policy is they've announced support for liquidity because of all the intervention that had squeezed market liquidity a bit. And they've also announced that they will be intervening, to prevent the rupee really excess volatility. That's very important to emphasize that, because there's a perception that this regime is hands-off. But it is the old RBI policy, and they continue with it, that they will prevent excess volatility and persistent misalignment. I think that should give confidence to the market.
Yeah.
The mode of intervention can change. I think they've moved to a sort of step. They're not defending any rate, but they will prevent persistent misalignment.
Yeah. Important to state, and it's not like they don't have the artillery. They have about $686 billion worth of forex reserves. But ma'am, even as we were speaking about that, the rupee has once again erased those gains that it made. while the RBI governor was speaking, now trading very close to that 90 level. So let's see what happens once this dollar-rupee swap actually kicks in. Radhika Rao joining in as well. She's senior economist, executive director, DBS Bank. Radhika, your quick view on the 25 basis point now that it's come through, the liquidity measure, and finally on the rupee and the efficacy of that dollar-rupee swap over the course of the next 3 years. Does it lend that stability? And do we move higher as we wait for this deal to be struck with the US, or do we stick here till that is done?
Hi, I think the RBI has certainly delivered on most, if not all fronts that the markets were looking for. I mean, they wanted a cut, they've given a cut, they've wanted liquidity. Initially, there was some expectation that liquidity might come outside of the policy meeting, but I think not only have they announced OMOs, but they've also gone ahead with the swaps. And we had anyway expected them not to comment too much on rupee. I think they usually don't, except to say that, they're there, and then if there is any volatility, they would act, just like Ms. Goyal mentioned. So coming back to the rate cut, we had expected a rate cut this time, and I think that was really at the crux of it. What weightage do they give inflation and what weightage do they give growth? I think very clearly, because inflation was not only in October at a series low, but if you see the run rate for fiscal 26, it's running below the target range. So I think it is I think we're quite clear cut that they've given much higher weightage to the inflation targeting regime, and then they've gone ahead to lower rates. Now on the liquidity front, I think what the central bank, the expectations were that the total liquidity infusion could be anywhere in the range of 1.5 to 2 trillion. I think if you put the swap rupee value together, and if you put the 1 trillion OMOs together, we are there already. But this might not be the last. I think in the March quarter, we might see one more announcement. And again, I think this is going to be nimble-footed in terms of, what they want to do as liquidity pans out. Overall, I do think this might be the last rate cut for this cycle, but the guidance has been dovish, and I think that is the one that will help remain supportive of market action per se. We did see a knee-jerk reaction in the yields, but I think there's very clear focus on preventing a rehardening of bond yields, we would think. So yes, liquidity, I think here and now, certainly very important. And also, I think going forward, we do think there'll be more action going into the March quarter.
So when you say, Radhika, hi, Tamanna here, when you say last rate cut this cycle, by when do you think the next one comes in?
Certainly, Tamanna, I think in terms of policy easing, I think the central bank has really, delivered, at least based on what the inflation numbers were presenting. I think if you see the forward-looking guidance on inflation, it seems to suggest, which was also what we were expecting, which is that we have kind of at the bottom, and from here numbers would go up. I think so from that point of view, growth, base effects receding, one-off factors receding, growth settles into the 6.5% kind of range, and then we got inflation that's picking up. So this was a very good window, and I think they have really delivered on what was expected. Now going forward, I think the conversation thereafter goes into, do they go into an extended pause, or do they hike rates? I think pause looks more likely right now, but I think they will also want to be nimble-footed, right? So if the trade deal continues to get pushed, if exports come into more pressure, I think they would be ready to act. But for the time being, I would think the growth inflation mix, we would think that leans towards a pause, extended pause going into 26.
A pause going into 26. All right. I just want to, some of the reactions which have happened in the last 10 minutes or so, or last few minutes, I want to address them. First of all, markets off its highs, and a bit of a plunge there. The rupee slipping again past 90. Sriram, what do you make of the kind of reaction that we're seeing from the street as well? Not that I want you to respond on, every minute by minute kind of movement, but in the context of, are there concerns that are still unaddressed?
I think I can speak, of course, for the bond markets. I think yields have been kind of ranging and trending higher. That, I think, to some extent has got arrested. We have seen some softening of yields today post the policy. Yields are down about 5 to 10 basis points in different segments of the curve. And my sense, like I said earlier, is that I think going forward as well, there's a bit more of visibility and clarity now especially in terms of the open market operations for the Jan to March quarter. So demand supply becomes maybe less of a concern now going forward for the markets. So we do expect this downward move to sustain in terms of at least interest rates. The other segment I think that is likely to benefit is because there were worries developing on the liquidity front that the pace at which durable liquidity was reducing, given the FX interventions and expected CIC drainage over the next few months. There was a bit of hesitation even at the short end of the curve. That's also now got addressed by the RBI governor in terms of the measures and again the clear statement of intent that going forward they will be providing enough and more durable liquidity to the markets. I think that kind of again brings down even CD levels for banks, for example, as well as for a lot of corporates on the shorter end, NBFCs on the shorter end of the curve. So I think in general we see this policy as providing a lot more clarity to at least the bond markets and money markets. Currency, of course, I think is a lot more dependent on the trade deal and overall the global dollar movements, etc. So I do think the pressure might continue on the currency till we hear something definitive on the trade deal. But I think overall, even in terms of from a rate cut perspective, at least kind of projections that have been made by the governor for Q1, Q2 of next year, growth being below 7% and inflation being at 4%, I think provides that one more rate cut possibility. That's at least our expectation in the Jan to March quarter.
Interesting. So we've got one view that there is going to be a pause after this. We've got one view that there's going to be one more 25 basis point cut culminating at 5% for the repo. I wonder what Ms. Goel thinks about this. Do you think that there's one more in the offing, or do we see a pause? And what do you think about the increase, the sharp increase in the projection for the GDP, the drop in the inflation projection? This was warranted, but do you think it's enough?
Yes, I think it is good at present going forward. But what is really well done is that the neutral stance is retained, but there is a cut in the neutral stance and the guidance given is dovish. So I think markets had earlier, after that 50 basis cut in June, they had internalized because of the hawkish language that there cannot be a cut in neutral. And I think bond markets had hardened, rates had hardened. So this time, the perception should be that it is going to be data-driven going forward. There is a lot of uncertainty about growth and inflation because you're going to see rebasing to a new base year, as well as base effects coming in. And really, both inflation and growth numbers are very uncertain going forward. But we know that we are much below our potential growth, because inflation is soft, it's below target, so that they have done the right thing to stimulate growth and to keep the forward guidance data-based. Neutral allows you to move in any direction. So depending on how the data pans out, they could give a further cut or they could go into extended pause.
I have a question for Radhika. Radhika, these liquidity measures that they've announced, of course, the OMOs is on one side, but the USD, INR forex swaps that they're talking about, 3-year period, $5 billion worth of liquidity that is aimed to be supporting the economy. Have dollar swaps in the past been that successful in providing the durable liquidity for the need of the hour? Because this year we've seen other forex swaps also happen. First 5 and then 10. Or the other way around. I think the first was 10 and then 5. Have these been successful enough in providing that liquidity?
Hi, Vish. Certainly, I think so. They have been announcing these time and on, and I think that usually coincide with when they do feel that there is a considerable pressure. They've intervened, and then they would like to replace some of that intervention effect as well. So I think as a standalone, perhaps it has a mixed, impact. But I think what they would like to do is again see it as a part of a larger framework or a larger mechanism. And in way, matures when it matures 3 years from now. At that point, they already have prepared, and there's enough ammunition with them to kind of make sure it's not very market moving at this point. So I would a straight question answer from my part would be yes. I think it has had impact, but perhaps they don't see this as a standalone move, and they see this as part of a larger mix. And coming back to the currency, just like the other panelists mentioned as well, I think the currency has little to do with the rates right now, and it's looking at whole set of other catalysts, where the tariff differential is, and in terms of where the trade deal deferment has come from, and then also about generally keeping the currency at an undervalued level, which also tends to be exports and manufacturing friendly. So at this point, dollar rupee going above 90 again, I think again I wouldn't see that as a signal or an I would say indication of where the rate action has been. I think that's really moving on its own catalyst, which is very separate from the policy rate. So the kind of connection we used to see in the past between rate moves and the currency, that kind of correlation isn't very much in place at this point, particularly with today's rate decision.
Okay. Of course, in terms of beneficiaries, NBFCs stand out. Of course, in the financial space, you're looking at the implications for banks. So, Mr. Rajneesh Kumar, the question to you is, with rates lowering, transmission, do you anticipate that it's going to be quicker considering the kind of shift that you've had in the newer lending that has taken place, one? And do you see an improvement in asset quality on the MSME side? There's a little bit of relief that gets provided on that side, incremental a little bit. How do you see that panning out?
Yeah, transmission now is faster because RBI a couple of years ago told the banks that the lending has to be repo linked rates. So almost, I think now bank to bank it may vary, but 50 to 60% of the portfolio is repo linked. So automatically the rate gets adjusted, and rest of the books is fixed. So I have seen that transmission is now much faster than what it used to be in the past because of this change in the lending rate mix at the beneficiary. And lower interest rate definitely helps in terms of asset quality. There is no doubt about it. And the asset quality, if you look at the data which has come out, all the banks have declared their results for September. So it is holding on, and it is holding on well. And lower interest rate definitely, because it has a positive impact on the profitability of the businesses. So in return, the indirect benefit flows to the bank. So banking system, I think overall in the lower interest rate regime, though some pressure on the margin could be there because there is a lot of competition for the deposits, and the ability to reduce the rate of interest on the deposit side, that is a bit of a challenge, as I said earlier. And if the bond yields come down, then there are many other benefits on the mark to market that goes to the bank. So it is a complex balance sheet. But overall, the banks are not going to lose when it comes to the impact of this rate cut.
Rajneesh sir, thank you so much for joining in, for your comments this morning, and we always love having you on. That was Rajneesh Kumar, former chairman of SBI. But I want to go back to Radhika Rao on a point that you made about how the larger worry is something quite different, and the governor alluded to it as well. He said that the conclusion of the many trade conversations that are on right now would be a positive up move. Now, if that doesn't happen anytime soon, how much is this whole trade impasse with the United States beginning to wear on us? We're seeing it in our current account deficit, we're seeing it in our manufacturing exports dropping, and we're seeing it on the rupee as well.
Yeah, I think the trade deal is important from the point of view of where the tariff differentials are, and I think if the deal goes through, the gap between where India's tariffs are and rest of the region, for example, would narrow significantly, if not completely vanish. So that would be a positive for the currency. And I think until then, what you might see is that there will be a tendency to certainly keep it at more competitive levels. It does help to also take some part of the sting away from tariffs, and generally also aligns with the larger goal of improving exports as well as pushing through the manufacturing activity. So wherever there's again logistics or whatever differential that makes that kind of helps with the competitive rupee. So I think that's that's the larger goal. I think from here, there's not going to be a one-sided move in the currency, and I think you're going to see, as and when there are drips of news, positive or otherwise, that the currency reacts accordingly. But the central bank is going to be present. I think the intervention will be more obvious when there are sharper moves, less obvious when it's generally aligning with where the rest of the market is. So I think, yeah, as a near-term catalyst, I would think the trade deal is very important. But that said, I think the larger focus will still be to keep the currency at competitive levels, especially compared to its regional peers, which gets captured by either of the real effective exchange rate, metrics.
Okay. Do stay with us, Radhika and Sriram as well. Ashima, thanks so much for taking the time. Pleasure speaking with you today. You know, one of the points that was being made was with regard to realty, and we were asking Mr. Rajneesh Kumar what he thinks about transmission, and ultimately one of the first beneficiaries is going to be the realty space, because people tend to wait for these decisions and bear in mind the cost of a home loan, perhaps. So Santosh Kumar, Vice Chairman of ANAROC, is joining us on the phone line. We've got Nitin Bavisi, who is the CFO of Ajmera Realty as well, joining us. Nitin, I'll come to you first. Demand on the ground, it might have cooled off just a tad bit. I'm wondering whether you get a bit of a fillip now, considering that you've got that rate cut.
Very good morning. I think RBI has given the very timely boost by reducing this repo rate, which was overdue. And he has addressed the liquidity measures as well, kind of a thing. So I think on both the fronts, like on the cost and as well the quantum of capital, kind of a thing, what we expect and hope that, this turns into a quick transmission to the loans, kind of a thing, the borrowing rate which we have on our books and the portfolio, kind of a thing. And definitely the home loan rates is going to become more affordable, kind of a situation. So overall it's a positivity for the sector as such. And going forward, the outlook given for the inflation and as well for the growth, it really becomes a very conducive case in going forward, whereby there would be more headroom for the further rate cuts, kind of a thing. So all in all, it's very, very positive. And coming back to the realty sector, yes, ground reality has been very, very challenging last few or rather couple of quarters. Because of the environment and the regulatory challenges, but those challenges are now behind us. And this particular timely rate cuts is come very, very apt, kind of a thing, which will definitely accelerate the demand side, kind of a thing, and the affordability side of a thing. A lot of launches are also in pipeline, kind of a thing. It will definitely give a good boost to the home buyers looking for very, very, dream home buying, kind of a thing at an affordable rate.
Obviously, Mr. Nitin, yeah, I mean, rate cuts, good for real estate. That's obvious. You're seeing that in how the stocks are also responding. But is that demand really coming in?
Surely, so the numbers which the branded and the very, good track record driven developers, they have a good numbers and they are, seeing a good demand base, kind of a thing. And this particular kind of boost will further accelerate that particular momentum.
Okay, I'm going to go across to Santosh Kumar, Vice Chairman ANAROC as well. Mr. Santosh, thank you so much for speaking with us. Your just first response to what has been announced today.
Yeah, this is a good move from RBI. The RBI's decision to cut the repo rate by 25 BPS is a distinct positive for the Indian real estate sector as we close to the 2025. Especially, since April, I think there has been a reduction of around 125 BPS. On the back of the earlier easing, this move further sweetens the value proposition for the home buyers, particularly in the affordable and mid-income segment, which are highly sensitive to interest rate fluctuations. So the real impact, especially on the effective transmission of these benefits, if banks swiftly pass on this rate cut to the borrowers, I think we anticipate a renewed surge in the sales velocity carrying firmly into the next year as well. So there has been a little bit of impact on the demand in the last 2-3 months. But having said that, this push from the RBI will definitely help in increasing the velocity and demand for the real estate sector going forward.
Okay, so real estate, the story is there. That's positive. Santosh Kumar and Nitin Bhavisi, thank you so much for joining us on that aspect. But if you look at it overall with, some of the big takeaways that we need to see, and I want to come back to you, Sriram Ramanathan, on that. Come back with a question on the trade deal with the United States, which is hanging fire, and those differential tariffs. Do you see that as a pain point that continues? Because it all ties in, right? Your net FDI is in the negative territory because of equity outflows.
Yes, I think it is a critical one, and fact of the matter is we've been waiting for the announcement for quite some time. In fact, next week, I think, again, the US delegation is over here for the trade talks. I think we just need some clarity on that. And I think one thing to point out over here is we need a fairly significantly good trade deal to get announced whenever it does, right? Because it's not just about the...
We seem to be having a little bit of trouble with Sriram's feed, but then the point that he was making was fair to make, that a good deal will have to be announced for there to be a dramatic shift in the sentiment as things stand right now. But we are more or less at the high point of the day for the benchmark Nifty 50. I wonder how the broader markets are doing and whether they're keeping pace with the benchmark Nifty mid-cap index. Let's pull that up, and the small-cap index while we're at it, recouping those losses that you saw. It's been a choppy session, and that's understandable. 0.5% lower for the small-cap index. We're joined by Ashwini Kumar Tiwari, who's Managing Director at State Bank of India. Mr. Tiwari, thanks so much for taking the time, and pleasure speaking with you. Help us understand this from the banker's perspective as well, because of course it's positive in that one would assume that credit growth gets a bit of a leg up, but then from your perspective you also have to defend your margins.
That's always a balance, as you rightly said. So as we all know, that deposit rates, especially the term deposits, take time to reprice, because as they mature, then they are repriced. And this process had been playing out for the last several months after the last rate cut, and would have ended in the next maybe 1 quarter. So with this rate cut, maybe this gets pushed back by another 2-3 quarters. So that will continue. At the same time, we cannot reduce rates very drastically, because the savers also deserve a little bit of fair compensation. So our committee will meet to decide on that. But loan rates will surely be repriced very quickly, because these are linked to external benchmark mostly, and the deposit rates will take time to get priced in, provided we decide to cut them. So therefore, there will be some pressure on margins, but overall, it will settle down in the next 2-3 quarters. And on the credit growth, I think the growth for us, credit growth, especially on the retail side, has been very strong. So there'll be some more enthusiasm and some more pickup in that. But overall, I think the material impact on credit growth is not likely to be very significant, because it's already very strong.
Just to follow up on a couple of those things, Mr. Tiwari. One, I just want to understand how much of the book currently is MCLR linked, marginal cost of funds linked in that, and also how long do you think that those loans will have to transmit today's cut? And second, already Mr. Sethi is guided towards an improvement in the credit growth for SBI. Does that change at all from this point?
So the improvement guidance was provided recently only. So it was from 10 to 12 to 12 to 14 now. And we stick to that guidance, because what we are seeing is very strong retail growth, mortgages, auto loans, the personal loans, all of them, gold loans especially, all of them have been growing very strong. So therefore, the guidance reflects the improved sentiment and the growth numbers as we stand. Even the corporate side loans had picked up in the last quarter, and we expect that also to come back into double digits. So we don't, at this point, we don't want to revise it further upwards, because we need to see how this goes from here. It's in my view, it's already quite strong.
Just sorry, on the MCLR portion, sir?
Sorry, MCLR. So our external linked benchmark rate is above 50% now. So that gets repriced very quickly. The MCLR linked rate is roughly around 30%, if I remember the number right.
Mr. Tiwari, interestingly, in the RBI governor's speech, he pointed out where weighted average lending rates are, and I'm calling back to your point about deposits getting repriced later. But if you look at where the weighted average lending rate for new loans is, that has come down by about 69 basis points between February and October. That's something he pointed out. He said that the effective impact on rates is about 78 basis points. On the other hand, weighted average deposit rate for the fresh deposits is down by 105 basis points. So you're actually seeing the inverse, where the rate cut passing on the deposit side is higher than what is there on the credit side. So I'm just trying to understand how that transmission works out.
So said that the stock of deposits, that rate has come down by 32 basis points. So therefore, the repricing impact clearly is with a lag. And this is borne out, and this will continue to play out as we go forward.
Okay. Mr. Tiwari, very good morning. Tamanna here. Just a question on the kind of transmission that you are expecting to see. And this is not specific to SBI, but on the sector overall, this has always been one question, that is transmission keeping pace with the direction that the central banker is giving? So just your view on that.
Yeah, good morning, Tamanna. So the transmission has been happening. If you recall, the governor in his speech said the transmission has been satisfactory. And what we are seeing is on the lending side, because there is a lot of repricing on the corporate side which is happening, and also on the retail side, since most of the loans are linked to the external benchmark, they get repriced, the new loans get repriced very quickly, and the older loans, again, many people come back to banks and ask for a reduction, or they shift banks. So therefore, reduction on the loan side, even though what was just said, that the overall reduction is 79 basis points and deposit rates seem to be higher. But what we are seeing on the ground is that there's a whole lot of reduction which is happening on the loan side. So that will happen. And deposit side, while reductions have been done, in our view, there is not much scope to cut rates further on the deposit side, regardless of the rate cut which has happened today. And our committee will meet to finalize this. But the deposit rates on the term deposit side are at a bottom, and we don't think we should reduce it further for our savers. So therefore, this rate transmission will happen very quickly.
Okay. So you're saying that deposit rates can't go any lower, close to rock bottom is, I'm assuming, how you look at it. What about lending rates? How much more scope is there, you think?
Oh, lending rates, the external benchmark, which is repo / T-bill rate, will get repriced on its own quickly, because that's immediate. On the other side, the longer term loans, again, as I explained, the corporate side, there is a lot of repricing for longer term loans, the MCLR linked loans. And on the other retail side, mortgages, which are big ticket loans, there again, the customers come back to the bank and ask for reductions. And in case some bank is resisting those, they shift the bank. So therefore, the retail side loans and the overall loans in general will also see the repricing happen quickly. That will be much more pronounced than on the deposit side, in my view.
Mr. Tiwari, just a logical, or logically taking that forward. So on the one hand, you're saying that it's going to be hard for you to cut deposit rates further. On the other hand, you're saying a large portion of your book is external linked loans where the transmission will be automatic. You've managed to defend your NIM at that 3% level for the domestic side. So therefore, the question is, will it be hard to do that in the third quarter? And can you expect there to be an erosion there?
So there will definitely be a pressure on NIM for sure, because that is something which is a natural outcome of these kind of rate cuts. And if we don't reduce the deposit rates, clearly there will be pressure on margins. Now, how much there will be, our endeavor would be surely to make sure that whatever repricing we do for on the corporate and SME loans is not that large. It should be just in line with this, and we hope to improve some realizations in the other categories of loans which are higher yielding. But overall, yes, I take your point, there will be a pressure on the NIMs. How much that will be, we have to see.
Mr. Tiwari, you've utilized the savings bank rate to ease a little bit of pressure, and it's already pretty low. Will you consider lowering that further? Because I don't think your depositors bother too much about the rate that you're providing. So you might have room there?
We haven't thought about this so far because right now, I mean, the house view was also that there may not be any further rate cuts. Now, with this happening, I think we will go and see what happens to the NIM in the Q3 and decide from there on. Right now, there is no decision as to whether we want to reduce the saving rate further.
Just one last question on the treasury gains that you might possibly have, if you have an opinion on that, assuming that you think that the rate cuts are over for now. But you've still seen a rate cut today, and I'm wondering about transmission in the bond market as well, whether you expect that to bolster PAT in the third quarter?
Well, the rate reductions always have an impact on the mark-to-market because there is a stock of higher yield securities. So there will be some impact on the mark-to-market. We haven't assessed that as to how much that will be. And to that extent, there could be some positive impact on the profits in the Q3 and going forward. But we haven't yet analyzed that as to how much that could be.
Fair, Mr. Tiwari, thanks so much for taking the time. Absolute pleasure speaking with you, and look forward to talking real soon.
Yeah. So the completely power-packed show, and news day, because you have mass cancellations of flights on Indigo. Putin will be meeting Prime Minister Modi shortly. Those live visuals on your screen. And RBI Governor has delivered.
And a recovery in the market.
And a recovery in the market. So we'll take a very short break. We're coming back with Ask Profit on the other side, where your queries get answered. But before we get into that break, listen in to the RBI Governor Sanjay Malhotra speaking on action that central bank will take by buying 1 lakh crore of bonds and conducting a $5 billion forex swap.
After reviewing the liquidity situation and the outlook, as mentioned earlier, we have decided to conduct OMO purchases of government securities amounting to 1 lakh crore rupees in this month. Moreover, we will also be conducting a 3-year dollar-rupee buy-sell swaps this month. We are hopeful that these measures will ensure adequate durable liquidity in the system and further facilitate monetary transmission.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money, and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye, 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors.
Hello and welcome to NDTV Profit. You're watching Ask Profit. Of course, a very truncated session today, largely because of the RBI policy meet and the comments coming post that. But we'll start and take just all of the queries which you guys send right now, so and get straight into them as we speak. So let me take the first one, which is from Satyan, and we'll also take it with with our guest as well. So let me also introduce our guest as we speak and get those perspectives from to you from them. CA Tapan Doshi, he is the research analyst at CATapan.in, and Osho Krishan, Chief Manager and Technical and Derivative Researcher at Angel One. Gentlemen, thanks so much for joining in for the limited part of the show. The first query that we're getting is on Central Bank of India. Satyan from Palakkad is asking if we can hold on for the next 1 year. Tapan, what would you recommend on this query?
Yeah, see, of course, seeing this RBI rate cut, and I think all the PSU banks are quite in a sweet spot. And I think from here also double-digit credit growth I can see for Central Bank of India. Even the CASA rebuild will be there. Retail and SME loan growth will be there. Again, if you see even the profitability, I think now it's been stabilizing, because if you see the gross NPA and net NPA, it's going down. So yes, I'm quite positive in this stock. One should continue to hold this stock.
Next query is coming in from Shiva from Hyderabad. He's holding around 11,500 shares of Sadhana Nitro at an average price of 15 rupees per share. His current loss is around 55%. Should he continue to hold this counter or exit? Tapan, any view on this counter, Sadhana Nitro?
See, it is going through a tough time, and I think still it's not out of the blues. If you see, the demand recovery will slowly and gradually will go up. Raw material prices stability is going to be there over the time, but now the PAT impact will be there. Again, the capacity utilization is improving, but slowly. So I think things will be getting on board slowly and gradually. So if he is not in hurry, I think she can hold the stock for now. Currently, maybe 1 or 2 quarters he can check it and then take a decision.
Got the view, Tapan. We have the next query on Vardhaman Textile, and our viewer is asking a short-term query on this one. Holding roughly 1,000 shares at 514. What would you recommend? Osho, welcome to the show.
Very good morning, Puneet. For Vardhaman Textile, the view is quite sidelined. The counter has not performed well in the recent period, and it is hovering below the long-term moving average. So I expect that there can be some kind of continued consolidation that can be seen in the counter, although there is no positive or even negative sentiments associated to the counter. On the higher end, I am expecting 460-65 to be seen as the immediate hurdle, and a breakout above 465 can provide some kind of momentum in the coming period. So from medium to long-term perspective, it will be advisable to hold the counter.
The next query is coming in from Mohit from Kerala. He is holding few shares of Kamath Hotels, bought at a price of 290 rupees, and Glottis India, bought at a price of 77 rupees. Both the stocks are currently trading below his buying price. He wants to know whether should he continue to hold this counter for the next 3 months or should he exit and book losses. Osho, any views on Kamath Hotels and Glottis India?
Kamath Hotels is looking quite okay to me on the technical front. It is at a very strong support level. So from here onwards, there is possibility of some revival can be seen in a short-term perspective, but it is having a very strong resistance level around the zone of 270 to 280 kind of a zone. So that will be a critical level to watch for. If it gives a breakout, then from there onwards, we can see some kind of positive momentum in the coming period.
That's Osho's view on Kamath Hotels. We have another caller now dialing in from Mumbai. Nikhil has a stock query for us. Nikhil, welcome to Ask Profit. What's your query?
Good morning. Body Renewable Technologies Limited taken at 1099.80 shares.
Okay.
Right now it's sitting at 993. I believe that it is having a court case. Do you think it will recover and go back to its old figures?
And got it, Nikhil. Osho, let me come to you on this one. Nikhil has bought Vari Renewables at 1099. What would you recommend on the charts? Can come back to this price?
Technically, the counter is into kind of a correction phase. It has seen a kind of deep dive from the zone of 1300, and there has been one-sided move in the counter. So I expect that in the short-term perspective, the pain is still evident in the counter. On the lower end, I'm expecting 960 to 950 to see some kind of cushioning or provide some kind of cushioning to the counter. But on the positive front, I am not witnessing any kind of reversal at current levels. So once it tests the zone of 950, then we need to review the counter that whether from those levels it can see some kind of reversal or not. But at current levels, 30 point of downside can be seen in the counter.
The next query is from Surendra from Chennai. He's holding 70 shares of Olectra Green Tech, bought at a price of 1,270. He wants to know whether should he continue to hold this counter or should he add more or should he sell? Tapan, any view on Olectra Green Tech?
Olectra Green Tech, if you see that electric vehicle profitability expect to grow gradually over the next 2 years. Even the battery localization is going to improve the margins. And see, the EV adaptation is there, so that's why this company will be benefited over the time. If you see the tier 2 also demand is going up, and for company realization is improving to the premium mix. So yes, I know of course the stock is going down, but I think the valuation has also come down a lot. So I think one can hold this stock for the next 1 or 2 quarters. I think things will be settling down for this stock over the time.
Got the view, Tapan, but we have another caller now dialing in from Chennai, and Swaminathan has a stock query for us. Swaminathan, very good morning and welcome to Ask Profit. What's your query?
Yeah, that is, I wanted to purchase Keynes Technology because Kotak has passed some strictures on Keynes Technology, as well as the lock-in period is also over. So the people are telling it whether it is the right time to buy or shall we wait and buy, whether for short term as well as for the long term.
Got it, Swaminathan. Tapan, would you recommend buying to Keynes Tech right now? Because a lot of news flow coming in from yesterday as well as on today. Stocks almost down 10% in the last 2 days. What would you recommend?
I think one can let it settle down, but the company is good over the time. If you see the results are also coming good. Even if I see the EMS demand is expected to strong next 2 years. The operating cycle is expected to be normalized. But the problem was with Keynes was the valuation was on a higher side. Now slowly and gradually it is coming down. If he's not in a hurry, I think he can wait for 10-15% down from here also, and then he can start accumulating slowly and gradually. Overall, long term, I'm bullish on Keynes Technology.
The next query is coming in from Sunil from Bangalore. He's holding 350 stocks of Moschip Technologies purchased at a price of 255. Should he continue to hold or sell? Osho, any view here, Moschip Tech?
Again, the counter has seen a decent correction from recent period of nearly 218.85 kind of a zone and is hovering at a comfortable level. So one can stay invested in the counters and even can add further positions once it gives a breakout above 220 kind of a levels. So overall, one can look for accumulation purpose and even can hold it from medium to long-term perspective.
Got the view. We have another, and right now what you're seeing on screen is also live visuals from Delhi. Now this is coming in, of course, because Russian President Putin is in India, and we got you the extended coverage yesterday. Live visual coming in of him entering the Rashtrapati Bhavan. So we'll get you and continue to get you a lot more updates as and when they happen. And that's a key one that you have to monitor in terms of defense agreements, amongst others, that could come in as well. But after arriving in New Delhi for his nearly 27-hour India visit, he will hold a meeting with the Prime Minister Narendra Modi and attend the India-Russia Business Forum at the Hyderabad House in the national capital. He will also, and that's going to happen before addressing a press meeting. And there on Friday, later in the day, of course, later today, the 73-year-old leader will also attend a private event, meet President Draupadi Murmu at the Rashtrapati Bhavan, amongst others, and attend a dinner with the Indian leader there before flying back to Moscow. So we will continue to get you all these exclusive coverage right here on NDTV Profit. But let me go across to and take the next query as well on Cochin Shipyard. Lokesh Kumar has been holding this particular counter for roughly about 61 shares. He's currently sitting at a loss of about 25,000. He's not mentioned his buying price yet, but Tapan, any view on Cochin Shipyard? Can he hold it for the next 1 year?
See, the stock has come down because of the high valuation, but you know that shipbuilding demand is going to be strong in next 2-3 years, and margin is also going to improve slowly and gradually. The problem is the execution part. They are not able to execute in a way with the market is expecting. Even the revenue is falling compared to if you see the valuation. So I think because the strong defense is there and export pipeline is there, I think if he can hold the stock, I think he should hold, but it will take some time to recover. I think if he wants to switch also, I think GRSC or Mazagon will be a better option if he wants. But yes, Cochin Shipyard will take time to recover.
Queries from Anusha from Warangal. She's holding 2,800 shares of Tata Steel, bought at a price of 180. She wants to know the short-term view on this counter. Osho, what's your short-term view for Tata Steel?
The counter is into a corrective phase, but looking at the recent development, the counter is at a very strong support levels also. So I expect that the zone of 160 will be providing cushion to the counter, and from these levels there might be some kind of recovery phase that the counter can enter into. So from short-term perspective, I expect 160-64 to seen as a support zone. On the higher end, it is having a resistance around 175. So a breakout above 175 can provide some positive trigger. So it will be advisable to hold with 160 stop loss, and 175 should be kept at a watch list. Once it breaks through 175, then 185 to 190 will be the next target.
Got the view, Osho, but it's time now to take the only rapid fire round in this edition of Ask Profit. Osho as well as Tapan, you know the drill. Keep your answers on buy, sell and hold so that we can take as many queries as possible. The first one is from Keetana. She's holding Biocon at 418. Should he continue to do that, Tapan, even after the amalgamation decision of Biocon Biologics?
Yeah, continue to hold.
Next query is from Venkat Ramani from Bangalore. He's holding 1,000 shares of SpiceJet, bought at a price of 44. Is it a good time to buy more, Tapan?
No, sell.
Indian Bank bought at 846. What should he do with this counter, Osho?
Indian Bank is a hold.
Next query is from Sai Kiran from Bangalore. He's holding 1,369 shares of Sagility India, bought at a price of 51.15. Should he add more? Osho, any view here?
Sagility is looking positive to me. In the coming period, we can see some kind of a strong momentum. It is advisable to hold.
Mascon Doc bought at 3,100,000 shares by Akhil. What should he do, Tapan?
Buy at current levels, also on deep.
Sunil from Bangalore has 500 shares of Geo Finance, purchased at a price of 220. Should he hold or book profits, Osho?
Hold.
Our viewer has, Vivek from Kolkata has 1 lakh rupees to invest. What can he buy right now, Tapan, according to you?
I think defense will be a better option. Also NBFC and PSU banks.
Agashri holds few shares of Tata Consumers, bought at a price of 1,172. What's the near-term perspective here, Osho, on Tata Consumer?
1190 to 1200 is a very strong resistance level. Once it gives a breakout above 1200, then only some positive trigger can be seen. But on the lower end, 1120 is a very strong support levels also. So it will be advisable to hold the counter. A breakout is expected to be seen in the coming period.
Tata Motors, PV and CV, both shares held by a viewer. What should he do with either of them, Tapan?
CV is in a much more better position than the passenger vehicle. CV can buy, passenger vehicle wait for 2 quarters more.
Rajesh from Chennai holds 7 lakh shares of IDFC First Bank, bought at a price of 76. What's the target here, Osho, for IDFC First?
For IDFC first target that is expected to be seen is near about 88 to 90, and if it breaches, then again we can see some kind of 3-digit number.
GMR Airport bought at 105 by Pratap. Should he continue to hold, Osho?
Yes, it is a hold. It has given a breakout and retesting the neckline, so I'm expecting 98 to 100 as a support level.
Right.
Gul has few shares of Reliance Industries, bought at a price of 1200 rupees. Should she continue to hold this counter? Tapan, any view?
Yes, hold, and you can buy it every dip.
Tilaknagar Industries bought at 469. What should he do with it, Osho?
Tilaknagar is a hold at current levels.
Shinoj from Abu Dhabi has 348 shares of Delivery, bought at a price of 416.51. He's currently sitting on a loss of 5,000 rupees. Should he buy more, sell or hold? Osho, any view?
It is at a very strong support levels. Try to accumulate more around the zone of 430.
Well, Osho as well as Tapan, thanks so much for joining in today. That's all the time we have on this edition of Ask Profit. But appreciate your answers on the 24 queries that we managed to solve in this short span. But also viewers, thanks so much for joining in today, getting us perspective and sending in your queries for a truncated session. KYC comes up next.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar.